Hello traders, welcome back to the channel. Please, if you are new to this channel, please subscribe, please like this video, and then ask your questions below in the comment section, and I'll be right there to answer them one after the other. Today I want us to look at this simple strategy, and let's try it out and see how it goes. The strategy is made up of just three things. The first thing we are going to look at is demand and supply. Okay, we'll be looking at demand and supply. We'll look at 15-minute market structure. Okay, we'll look at 15-minute market structure, and then 200 EMA, 200 exponential moving average on 5 minutes. Okay, these are the three things we are going to look at. Okay, so now demand and supply. We all know that demand talks about buying and supply talks about what? Selling. Now demand in forex trading or demand in the financial market trading is simply areas where large institutions place their buy orders. So let's say market decides to accumulate here and then gives a sharp move to the upside. This area here, this zone here, all these accumulations or the resting point, all these accumulations becomes demand. Okay, and the opposite is this one, supply. So let's say price is here and price decides to accumulate or consolidate and then gives a sharp sell point. Okay, so this point here, this accumulation here becomes the supply zone. Okay, this accumulation becomes the supply zone, and you want to wait for price to come back into the supply zone, and then you take an entry from there. I don't know why this thing is not coming back from there. Okay, yes, that's simple demand and supply zone. Okay, when we go into the chart, you understand. Okay, and we also have 15-minute market structure. Simple, we look at what? Higher highs and higher lows in an uptrend, and lower lows and lower highs in a downtrend. So that's just simple and then basic understanding of market structure. If you don't also get the basics too, you can check my last video. I explained market structure very well. Okay, and market breaks structure to the upside, that's a bullish market, and it also breaks structure to the downside, that's a bearish market. Don't mind how I drew it, but when we go to the charts, you have the basic understanding of everything I'm trying to explain here. And now the 200 moving average. What we want to do is, let's say this is the 200 moving average. Okay, let's say this is the 200 moving average. We only want to be buying if the demand and the supply zones is above this 200 moving average. Okay, so let's say we only want to be buying if price is like this. Okay, this is what we want to be buying. Once price comes below this, we cease to buy. Or once price touches this moving average, we no longer look for buys, but instead we look for sells, and then to continue. Okay, and if price is also operating below, let me get rid of this. Okay, let me get rid of it because the place is scattered. A second, and let me get rid of these things. Okay, so let's look at the sell side of things. So if price is also below this 200 period moving average, we want to also be looking for what? For sell point. So we only look for what? Demand and supply zones that are selling. So let's say we have to get a demand or a supply zone here to sell, another one here to sell, and we continue like that. And the moment price touches this moving average, we no longer look for sells, but we wait for a pullback and then we buy to the upside, because price has shown over time that anytime it touches the 200 moving average on the 5-minute time frame, it is coming to reverse. So you just look for a valid order block or demand here, and then you buy to that upside. So this is exactly what we are going to do, and I'm going to open my charts and show you exactly what I'm trying to explain here practically. Okay, but don't also forget to backtest what I am trying to show you here on your personal chart, so that you'll not just be left out, or you'll not just be looking at the charts alone. Okay, as you can see, this is my chart, and as you can see from the higher time frame, from the 15-minute time frame, you can see the price looks like is what, bullish. But when you look at it very well from here, judging from here, price is bearish. Okay, price is creating what, lower lows, lower highs, and this is what price is simply doing. But if you look at this point from here, okay, if you pay attention to market structure, you realize that this is the last swing low. Okay, this is the last swing low. This is the last swing low. Price broke to the downside. This is the last swing low, and we have broken out that swing high, which means market structure wise we are no longer bearish, but we are what, bullish. Okay, we have changed character from SMC point of view. We have changed character, so we expect to create another one, higher high from this point. So this is the basic understanding of what we are looking for. Our market structure is what, is bullish from 15-minute time frame, as you can see. Okay, and this is, so let's move to the following trading day. Okay, so this is our trading day, and as you can see, the order block that led to this break of structure is from this here. This is the order block or the demand. Okay, don't forget, order block is simply the last candle before the impulse, and the demand zone is simply the entire neighborhood, but the order block is just the exact house from which the impulse started from. That's simple about the order blocks and the demand zone. Don't get confused. Okay, but there's a liquidity sweep from here. Okay, so market is reacting from this order block. So let's see how price goes. Let's see. I always open my sessions so that I will know when to trade and when not to trade, because this is Asia session. I cannot be trading in the night. You should be sleeping by then. And there we have it. Now this is around 6 o'clock a.m. in the morning, and from here you can also see that we are acting from this demand zone, and we are moving to the upside. Now on the 5-minute time frame, where we look for the entries, you can see that price, this is what price did. Price is up. Okay, price is above this moving average, which means we should be looking forward for buys. Market structure is bullish. 15-minute and 5-minute moving average is saying what, we should be looking forward for buys, or we are what, in an uptrend. So what we need to do is just to look for a valid demand and supply zone, and we take our entry. And as you can see from here, you can see that this is a break of structure from the 5-minute time frame, and this is a valid demand zone, or this is the order block exactly. But if we are to mark the entire zone, we have to include all the wicks here. But if you want to mark only the order block, we just mark only this red candle. Okay, so mostly I actually use the two. Sometimes I mark the entire zone, sometimes I mark the exact order block. But let's see how it goes. Since we are above, and so you see that price comes back into the zone. So if we had entered here with our buy tool and put our stop loss below this block, and then we target, let's say we are targeting 1:3 per trade, we have already hit take profit. if we also decided to target 1:6, 5, higher risk reward, we'll have still hit take profit using this simple analogy. Okay, now let's look at, so we have, this is Monday and we have already made this profit. Let's go to 15-minute and then look at what structure is doing. So looking at 15-minute time frame, this was our previous swing high, and lucky enough we have broken it. So it means the buy side or the bullish market structure is still valid. So let's see if we will get another entry. We'll get another entry. Now the next entry we could get is from this valid order block, this red candle. You can see this red candle in between, that's the order block. Or we can decide to mark the entire zone, which will be so huge, but let's just stay tuned to the order block, okay, and see if set our buy limit there since we are above, and then put our stop loss a little bit below it and target maybe the previous swing high. Let's see if price will mitigate it. Okay, price is coming close. Price has refused to mitigate our order, but we have already banked 1:5 risk reward ratio plus. Okay, so we have no need to worry about. And look at this point, you can see the price has touched the line, and from the explanation I gave, anytime price touches this line, let's say we are above and price decides to come and touch the line, just know that price is going to give a small pullback like this and then break it to the downside. So if you were buying, you need to stop buying. If you were selling, if it happens like that, you need to stop selling and maybe stay out or look for an opportunity. So this is around almost 4 p.m. GMT, and you should be tired of trading for the day. So let's wait for the following trading day and see what happens. Now this is another trading day, and as you can see, price is pretty much very bullish. Okay, so from 15-minute market structure, you can see that we are breaking structures to the upside. We are bullish on the 15-minute time frame. So being bullish on the 15-minute time frame means what? You should be looking for buys from the market structure perspective. Now let's go to our 5-minute moving average, and we are also above the moving average, which means buying is very much safe. So let's look for a valid order block or a demand zone, since we are in an uptrend, to look for our entries. Now we can see that there's a break. Let me mute this. So you can see there's a break of this previous swing high. Okay, that's a break. Now we look for the demand zone that led to this break. Now we have this recent one, and we also have this one over here. Okay, now these two, which one are you taking? For me, I always prefer the farthest, the one that is always at the bottom, so that the immediate one will be a liquidity sweep or an inducement for me. So I will leave this, and then I'll take this as my valid order block or my valid demand zone. So I'll quickly put my pending order there, my buy limit, and I'll put my stop loss below here, and as usual I'll target at least 1:3. Let's say we're looking at 1:5 from this point. Now price decides to do its own thing. Don't forget, this is London session, and let's see what happens. Okay, price has mitigated. We are in from this week. We are in. Let's see what happens. Let's go to 15-minute and see. Okay, price is already close to take profit, and there we have it. Okay, we have already hit take profit like that, 1:5. We are already at take profit 1:5 before the reversal happened. Okay, before the reversal happened. And now looking at what I was explaining, anytime price touches the line, just know that price is going to give a pullback and then change trend. Now look at what happened here. See that when price came here and touched this line, small pullback, we broke and we tested and then we continued. Okay, so that's simple about it, and then you can try it out on your own. Okay, you can try it out. Let's check for another trading day and see how price would have played out. Let's check for another trading day and see. Let's see another trading day. Okay, from here you can see that we are on 15-minute time frame. Market is bearish. Okay, this is the last swing high. Okay, this is the last swing high that got broken, and this is the previous swing low that got broken. So automatically we are no longer bullish, but we are what? Bearish from 15-minute market structure perspective. Now let's go to 5-minute. Now 5-minute is also saying that what? We are below the moving average. Okay, so what do we mean? If we are below the moving average, market structure bearish, moving average bearish, we should be looking for sales. But let's see what happens. Price has touched the moving average and it has come down again. What does it mean? It means that anytime price touches the moving average, like I explained earlier, like this, and comes down, it is only going to give a pullback and then straight to the upside. So once price touches this moving average and comes down, it is going to bring the moving average to the upside. Okay, so from the 5-minute time frame, as you can see, and you can also see that this was a small swing high that got broken. If you go to the 3-minute time frame, you will have it clearer. You can see that this is a swing high, a swing low, another swing low. Now this swing high got broken, which means we have changed character from that 3-minute time frame. And the other block was this one, and it has confirmed that from the moving average you can buy, but from market structure we are what? We are bearish. So in this case, you can decide to stick to the moving average bias and then what? Take the trade like this. Okay, and let's see what happens. Let's see if we will get like 1:3 or 4 TP. Let's see. Okay, we are in and we are already moving towards the direction. Okay, we are almost there. Okay, we are up 1:6 reward ratio plus. That's pretty much about it. So you can try it out on your own charts depending on the currency pair. You can choose any currency pair of your choice or any instrument of your choice, back test it, and don't hesitate to come back to the comment section and comment how you experienced what I am trying to show you here, how it went out on your own charts, whether what I am saying you are actually seeing the same thing or it's just something I am saying on my own. So please subscribe to this channel, like this video, and leave your comments below, and I'll see you in the next one.